What's up, you guys? It's Greg. Today I'm going to talk about real estate investing for beginners in 2021. Now, we all know, if you've been following the market, that the market is really hot right now. So I'm going to give you a couple of tips as well as a couple ways that as a beginner investor that you can go ahead and get started in real estate investing. So let's jump right into it. And I think the best way to get into real estate investing for a beginner is to actually go and house hack. And what house hacking is when you buy a single family home or a duplex, a triplex, or fourplex. So basically just, a 1 through 4 unit property, and you use tenants' income to supplement your mortgage payment. So basically how this works in layman's terms is you move into a property, you buy and move into a property, and then you place a tenant in the unit next to you or above you or wherever the second unit is, and then the tenant pays you monthly rent, and you use that rent to pay down your principal and interest, so basically just your mortgage, your taxes, insurance, as well as you're able to hold a little bit for reserve, because with that, when you're running your numbers, you're probably going to pick a price point to where you can actually make a little bit extra money on top of what they're paying you in rent. So you actually get to live in the property for free while they're paying down your principal and interest, and plus you might get to make a little bit of money on this side. So how this works in like a single family home, you'd actually go in and buy the property. Ideally, you buy it below market value. So let's say the property after repair value is going to be worth about $160,000. So let's say you get into it for $70,000, $80,000, somewhere around there. You do some repairs, add some paint, carpet, like nothing major. Maybe you redo a bathroom or paint the cabinets or add a new countertop or something like that to just add a little bit of value to that rental unit so that you're able to increase the monthly rent of that property. So with a single family home, you would actually just move into like one of the bedrooms and you would rent the other bedrooms out to basically your roommates, kind of, similar to like a college setup where, you and a bunch of friends all move into one property. But instead of just splitting the rent and you just moving to a property that a landlord owns, you actually own the property. So the other people that are renting the bedroom is paying down your mortgage, your principal, interest, taxes, insurance, and things like that. So that way you're actually gaining equity in the property for every month that they're in there, paying down your mortgage. And basically that's how it works with duplexes, triplexes, and fourplexes. It's just you move into a unit and you just live in the apartment, and the other 1, 2, or 3 tenants basically just pay down your mortgage. And I think that this is going to be a really easy way for beginners to get started in real estate investing, because this doesn't have to be a long-term solution. You don't have to live there for the next 5-10 years. Like, you can move in, live there for a year, live there for 2 years, whatever it may be, until you decide that you have the cash or you just have the desire to live somewhere else. Because then when you move out of that one unit that you're living in, you can place another tenant in that unit. But keep in mind, like I said, the first tenant that you have in there is still paying you rent. So it actually works out to be a great situation. Plus, you're going to get really good financing as being an owner occupant. And as long as you're staying in 4 units or less, you get pretty typical financing. When you get 5 units and above, you start looking at commercial loans, and your down payments get bigger, and you're facing balloon terms and things like that. So if you stick to the 1 to 4, I think that's going to be a really good way to get started in 2021. If this video is getting you excited for real estate investing, it'd be really cool for you to hit the like button. It's down below. Honestly, it's free, and it lets YouTube know, like, hey, they're enjoying this video, so they start pushing it to a few more people. And hopefully you found this video helpful and you want other people to see it too. So I think another great option is to actually buy a house that would consider to be like a wedge deal or like a flip house, but you buy it before it gets flipped. That's the key, is buying a below market value deal. So let's say the property after repair value, is going to be $165,000. You go ahead and try to pick it up for like $80,000, $90,000. And honestly, your profit margins don't have to be quite as big since you're not flipping it. So you don't have to necessarily build in short-term capital gain tax, because as a homeowner and actually owning the home and living in the property, there's some tax benefits that you can take advantage of when you actually go and sell that property. So let's just say, for example, you find a home for $80,000. You're going to go ahead and put $15,000 worth of renovation into it, and you're going to actually do all the work yourself. So like, let's say you're going to do a new kitchen and a new bathroom, and then some paint and carpet, or paint and some flooring and things like that. So now you're into this house for $95,000, but the after repair value is $165,000. I don't remember what we were using in this example. You basically just net that entire profit between $95,000 and $165,000. So right there, your net worth has gone up by $70,000, and you get to have basically a brand new cosmetic rehabbed house that you get to live in at a cheaper price point plus your net worth has just gone up. So you have a couple options once you've reached that point. You can either cash out refinance, which we're not going to talk a ton about in this video just because it's not necessarily a beginner topic, or you can actually sell the property after 2 years and take advantage of the tax benefits that come along with a homeowner who has owned the property and lived in the property. Basically what that means is you will end up paying less in taxes that someone buys as an investment property and never moves into the property and then sells it. So this is actually a huge benefit that I think a lot of people overlook. And I think that's a big incentive to actually do this process where you buy a below market value deal, do some renovation, and then sell it high and then move every couple of years, because that helps you avoid paying taxes. Now keep in mind, this is not tax advice. I'm not a CPA, so make sure to check with your accountant that what you're doing is legitimate. And those are definitely going to be the best 2 ways to get into real estate investing for beginners in 2021, especially in this hot market. So now let's talk about where you can actually find deals for these properties. You can just go to the MLS, you can go Zillow, Redfin, Realtor.com, kind of the standard places that you see. There's also places where you can get auction sites or foreclosures. And these sites have been a little sparse lately just because of mortgage forbearance. So there's not really any houses going into foreclosure, but it's still worth checking out because houses do pop up on there. They'd be like auction.com, Hubzu, which is HUBZU. Another good option is HUD Homes. You can just type into Google and then it'll take you to the Fannie Mae, Freddie Mac, FHA, government foreclosures, basically. That's always a good resource to have. And then lastly, to find deals, you can actually do direct mailers. You can do like Driving for Dollars, like Deal Machine, or you can find a couple of properties in your area that you kind of, are keeping an eye out for. Like something to look for is like roofs that need to be replaced, or houses that appear to be vacant, or are in real bad distress, or, yards that are really, really tall and things like that, because the property owner might just be like just trying to just get rid of it and basically just waiting for somebody to come and be like, hey, I want to buy your property. So those are definitely some options, and you obviously can find off-market deals, and off-market deals are really some of the best deals you can get because it eliminates the competition factor. And I think a key factor to remember when starting to invest in real estate is to use other people's money and other people's time. And when I say other people's money, I mean the bank's money, because let's say you wanted to go ahead and buy $100,000 worth of Tesla shares. The bank's not going to be like, okay, you give me $20,000 and I will give you $80,000 for me to be able to go purchase $100,000 worth of Tesla shares. It just doesn't work like that. But you can go up to a bank and be like, hey, I want to buy this $100,000 house. I'm going to put 20% down, which keep in mind, you don't have to put 20% down. I'm just using that as in this example. You're going to put $20,000 down. They'll give you the other $80,000 and put a lien on the property. Therefore, you got into that property for $20,000. The bank put up $80,000, and after repair value, let's say is $170,000. Because the less capital you have tied up in every single project, the more money you have to be able to go and invest in other avenues. If you have $100,000 to spend in just straight cash, you can buy 5 houses, with putting $20,000 down, as opposed to buying 1 house in cash for $100,000. So you can have 5 rental units paying you cash flow every single month, as opposed to having 1 unit that's paid off, paying you 1 stream of income. I think another important aspect of real estate investing is to become debt-free, because becoming debt-free allows you to qualify for more when it comes to loan and having debt that is going to increase your net worth. Basically, this whole process of, you paying down your debt and getting your finances in order allows you to realize through that whole process that, hey, I don't want to go back into car loans or student loans or credit card debt. I want to buy things that produce income. I want to buy houses, and I want to buy rental units, and I want to buy flips that when I spend the money and the bank's giving me money and puts me in debt, it's good debt, because then the tenant is paying down my mortgage on that property. And also on the flip side, the bank will be more willing to give me loans the lower my debt to equity ratio is. Because if I have less payments going out, if you have a $1,000 truck payment every month, that's going to hurt you in what loans you can actually afford, especially starting out. So if you're able to clear some of those debts up and just go ahead and decrease your credit utilization, that's only going to work out to your benefit. I think the last aspect to this video is going to be continually increasing your financial IQ. And I know it's not necessarily a real estate topic, but I think it's very important that you are continuing to study and learning how to run numbers and learning the market and learning about taxes and basically everything when it comes to finance and economics, and just increasing your IQ when it comes to finances, because that way you can become a more sophisticated investor in the future. And I think for me, that's most definitely one of the things that has made the biggest difference, is me spending time increasing my financial IQ and learning about taxes and learning about insurance and learning about all the other aspects that come into play, so that I can make more informed decisions and it actually decreases my risk because I know more and more. But anyways, I hope this video was helpful. Hopefully you enjoyed it. If this video inspired you to go out and get some real estate, please comment that down below. I'd love to see your project. Thanks for watching. I'll catch you next video.